Looks like we are live. What is up, everybody? Hopefully, we got apes, outliers, glorious mix thereof. You guys will have to forgive the screen and setup on my end. I am on the mobile setup right now. I'm hanging out in New York, and we got our boys PB with his ever-evolving backdrop that is becoming more and more chic, and then we got Kevin, and I am absolutely stoked to get a chance to meet with you. I've been watching your material, like your tweets and stuff, and I just really like the content that you're putting out and stuff you're talking about. So stoked to get a chance to chat with you.
Yeah, appreciate it, man. Thanks for having me on.
Be- Beautiful. So the overall background I've ran into GameStop, just so that to table set super fast, is I've been a trader for this is my 17th year of trading. I started back when I was in high school. Super lucky. The guy's house I'm staying in right now is actually the dude that introduced me to investing, and he sent me down a completely different life path. And I've traded GameStop before, but from an options trading perspective, which is super volatile, lots of movement for me to be able to trade. And then this most recent move that we had in the spring, May, June, like that time frame, I started seeing unusual options activity kicking up again, volume starting to kick up, entered, started trading it. Now, at this point, though, I had a YouTube channel, which is completely different. I'm looking at it with a different lens. There's people that are explaining a lot of what's going on. And then this is now the 26th episode of me doing like specific videos about this. So that's at least 30 hours in live streams alone, just exploring GameStop beyond all the research I've been doing. So I am infatuated by the whole saga. I would love to hear, Kevin, from your perspective a little bit about how you found your way into GameStop, because you also come from a bit of a more professional background, as you can tell, because I'm a dude in a t-shirt and you're looking fine AF in your suit. So I would love to learn how you got into GameStop and like what your general lens is there.
Um, I got into GameStop right after COVID hit, and I was just researching all and screening all the companies that have just gotten obliterated by the news and the pandemic, seeing what opportunities were out there, things that aren't going to go bankrupt, things that will survive in this pandemic. And when I was screening them, I noticed that GameStop had 99.99% short float reported. And so I was like, what? Who would do that? So I called the info company and or the company that I got my data from and asked them, is this the real short interest or is this the highest your numbers can go on the data screen? And they said that's the highest our numbers can go. And I was just like, oh my God, this only takes one news article to explode. So I started getting all my clients into a small position at split adjusted $1 a share, and just waiting it out over the summer, kind of just bounced flat, and then Ryan Cohen comes in as the largest holder and buys a significant portion of the company. And I was like, that's the news that's going to send this. And then from that day on, the cycle started of them not being able to find shares, started going up. I can't say that part because it's going to be in our documentary. But then January 21 happens. I left Edward Jones. I was at Edward Jones at that time. My clients were top 10 shareholder of GameStop in 2020 before the sneeze. And then after January, I left Jones and opened up my own firm. And the rest is kind of history from there. That's how I found it. Was talking with Keith Gill and other people in 2020 going over the strategy, the deep value, everything like that. And it's crazy because I didn't know Keith was also a financial professional. And then once everything came out, and him getting called into Congress are pretty much just wiped the internet clean. I was like, I don't, that doesn't sound fun to me.
Yeah, fascinating. And then just one quick follow-up for you specifically. Um, from a professional investing slash trading background, you obviously are working with clients, and one of the things you're working with your clients is this GameStop position prospectively. And was that something at the time that was like a hard sell, or was it something that you already did in different kinds of forms with other positions, and this was just another one of those types?
Another one of those types.
Okay.
I have an eye for anomalies and noticing like things that are off or things that are on, like chart patterns. And so my clients before had these crazy positions or short squeezes that had ended up being 5x to 15x money just based on me researching so much. My father, who was also a financial advisor my entire life, I'm a second gen. He called me, and after I sent him one of my white papers, he's like, God, you should have been an analyst, but they don't make any money. And I was like, yeah, I just weirdly have a passion for research, like the three of us all do. And I just narrowed in on my niche we could, once commissions were kind of gone and managed money started, where, you know, a percentage of the portfolio value, I realized I could use all my research to grow my clients' money, which would literally benefit me. The more money they make, the more money I make, and love the strategy. Took all of the pressure off of them because Jones was still the highest commission probably in the United States at 2% buys or sells for stock. So, you know, $100,000 buy of Apple, they had to pay $2,000 in commission for it. So once I was calling clients to, you know, let's sell this to buy this, they know that that call made me $0, cost them $0, and I only think it's the best thing for them because I get nothing out of it except for their portfolio performance.
I figured the next thing I wanted to talk about, because PB, I've had a chance to pick your brain a bit about how you got involved in GameStop and like the history. So I thought we could just change gears for a minute and do a bit of a current state assessment. I'd love to hear really from both of you, but we could start with PB to get a sense of just where we are with GameStop today and what your general thoughts are about price action, how things are positioned. Don't have to go into whether or not you think that there's a squeeze coming or anything like that, like just overall level setting. And then just one other admin note for the question. I very much view myself as like a guest in the ape house because I know that there's people that have been in this thing for 4 years now, and that's not my path, right? I'm a trader. I'm in and out of things. So I really like to be able to understand the perspective of people. And PB and I have had a chance to talk to a few times. So I've also been able to see the arc of his perspective, which hopefully I have a chance to understand yours as well and the evolution of it, Kevin. But PB, current state of GameStop, where are we at?
Sure. So I think this year, especially right as we're closing out 2024, it's been a very transformative year for GameStop. You know, we've had basically 2 prior years of almost like a slow, steady grind in both the stock price and also company performance. Ryan Cohen was essentially committed to making GameStop cash flow positive and to stop seeing bleeding losses every single year. You know, he wanted this overall business transformation to take place, but it's taken longer than he's wanted to. And so he's had to let go of, you know, executives he's appointed. He's made some blunders, right? They did the crypto marketplace, which kind of fell apart and didn't provide enough revenue. And so he was trying to, right, like he was trying to justify his investment. He's trying to say, like, look, this company was bleeding, but we can turn it around. We can fix these problems. And, you know, finally this year, they've been able to make it cash flow positive and, reduce SG&A enough to actually make the margins worth it. And a large part of that means closing stores. I think something like 20% of the stores they've closed, and so their overall square footage has reduced, and then so has their net sales. But the benefit with that is, becoming profitable is obviously more valuable than just being a bigger company that's unprofitable and that's bleeding every single quarter. And so
Quick
this year,
question. Sorry, I
what?
just had a quick question on that. For the store closures, has that mostly been in Europe? Am I remembering that correctly, or is that also like 50-50 split? I thought it was mostly Europe. I just don't remember.
I think it is mostly Europe, but there are
Okay,
some closures in the US as far as I
got it.
know. And I haven't looked at the breakdown. I just know it's
Okay,
around 22% of total square footage has been lost since like 2021, I think.
thank you. Sorry.
And maybe Kevin, you can fact check me on that number if you know it's different. But this year, right, like we saw DFV return in a big way, and we saw the gamma squeeze and the short squeeze thesis kind of play out again, and GameStop was able to take advantage of this price action, pretty adeptly and raise a huge amount of capital from short share offerings. So they did first the initial share offering in May, an ATM, which was around, I think, like, between $40 and $30 per share. And then they did, which raised, like 1.5 billion, I think. And then they did another share offering in June when DFE started tweeting again, and the gamma ramp built even stronger. We saw the price skyrocket to like $80 a share. And GameStop did another ATM. They started, selling at, huge amounts of shares and raising, uh, up to what they have now is 4.5 and change billion dollars of cash. And so, we've known for a while that Ryan Cohen not only wanted to just save this company from dying, he actually wanted to transform it into, you could call it like a Chewy-like business, right? An online e-commerce company that could compete with the likes of Amazon. And now with this cash on hand, they actually finally have the ability to make this a reality. And a large part of the speculation online has been, right, like they're going to use this cash as a tool to acquire other companies, and then those companies hopefully have synergy with GameStop's legacy business, and then that can help propel them, in the coming years and quarters, to further success. But the problem that we've obviously run into is we haven't seen what that is yet. We don't know. And so it's the same thing I said back in October, I think, right? Like we're still kind of waiting on our hands, and they haven't given any indication as to what exactly they are going to do with the money. Now, if you read like the financial statements, the 10Qs, and then the earning reports, the one thing that they've said consistently since they raised this cash is they've said they will use it for general corporate purposes and or including mergers and acquisitions, and they include that exact phrase in every single statement they've put out. So they're kind of hinting that they're looking at this, but again, until they actually make the move, we don't know. And they probably want to keep that right on the down low as long as possible.
Yeah, and that makes a ton of sense too, because I mean, companies like that, when they raise cash, typically it's for a reason of some sort. To your point, really opportunistic raise, but yeah, sitting on a pile of cash as a company, it's only so good until you find a way to, generate revenue from it. So interesting update, thank you. And then, Kevin, I'd love to hear your current perspective of just where the company is, and from you, Kevin. If you don't mind, I would also love to understand from like your involvement in 2020 and your perspective at that time. How has it shifted to where we are today? Just because I don't know, I enjoy understanding more of the details on like the arc of analysis.
Sure. I'll start off really quick by answering Peruvians. As of February, GameStop still had 4169 stores open. They closed over 1,100. So with the news on Europe's closures, we're probably sitting close to 1,500 closed and 3,600, so a third are going to be closing. We don't know that number until next earnings comes out for the quarter. As far as GameStop right now, and last piggyback on Peruvians in the wording, of their report with their cash pile, they can also buy marketable securities, which is at the full discretion of Ryan Cohen. So they can now pretty much be a holding company of individual stock. I have not found out anyone that can prove my loophole wrong about them swing trading their own stock under that wording of
Interesting.
marketable securities. So usually when a company buys back stock, they retire those shares and it, goes lower and lower and lower. But there's nothing saying they can't buy shares of their own company, not retire them, and then sell them for a profit. So that was by far the most exciting thing that I noticed in the wording that I could not figure out the answers to. As far as GameStop now compared to 2020, at that time, short squeeze play. Anything that shorted 99.99 or more, I just saw it as, this thing just needs one catalyst. And I would not buy brick and mortar for my clients at that time. I'm like, for years they're asking me, hey, let's buy Sears, it's down 90%, or these companies. And I'm like, you really want to compete with Amazon? Like, are you going to order more stuff from Sears or buy more stuff in Sears or order stuff on Amazon this month? But the short squeeze play in the last 4 years turned into a complete turnaround of a profitable company. Nobody on Wall Street, no analysts thought it could ever be done. And now with even more unprofitable stores closed, the profitability is just going to grow. I can't guarantee that, but if they do everything exactly the same, then profitability would grow on the next earnings report. And they have this cash pile now that, number one, I agree with Proven, they don't want to say what they're going to use it for, give any hints. And if they don't have any backdoor ideas right now, then Ryan Cohen and GameStop is sitting on a higher cash percentage than Berkshire Hathaway right now with markets at all-time highs. So wait for dip, crash, whatever it is to buy cheaper, really good companies for mergers and acquisitions, or with the marketable securities, buy Apple the next time it drops 33%, or Tesla the next time it drops 70%, or Nvidia the next time it drops 70%. And so he's got this war chest of not only profitability, but cash that is backing it up going into a possible market downturn to deploy at that time.
Whoever feels like answering. One of the conversations that's been floating around a lot is the idea of a holding company and different ways that could look. So from your perspectives, trying to perceive what RC might be trying to configure. Obviously, it's a guess. Nobody fully knows. But looking at the game from his perspective, what do you guys think he might be trying to structure if he goes the route of a holding company? What might that actually look like?
Well, Kevin, I'm sure you could. I'm not sure how much you can talk about this, but there's a lot of conspiracy theories about what's going on, and there's some evidence. There's some like tangential evidence that seems to support some of the theories, right? There's also not enough to fully confirm anything, so we can't say for sure. But one of the main ones is that he wants to create almost like a Kiritsu style, business co-op that basically entails a central counterparty like a bank. And I think you can correct me if I'm wrong, Kevin, but I think he's already filed for Teddy Corp to be a bank. And the goal is to have this entity be like a loaning institution for this group of companies that will work together synergistically to compete against Amazon. And this comes from the Japanese, idea of business that emerged in the wake of the 1940s after World War II, as Japan was starting to rebuild. These, kiritsus were formed, which were basically like formal cooperations between businesses to work together on pricing, on on like logistics, transportation, all those things, so that the business could effectively compete with offshore entities in the US or in Europe. And what this basically entailed is by the late 1980s, right, Japan was a much more developed economy than before. They'd experienced the most rapid economic growth of any country in the 1980s. And they also saw, unfortunately, the development of a bubble, but these business practices were fundamentally sound generally, and they were adopted worldwide. And so the theory is with his, with his creation of this Teddy Bank entity and his loaning of capital to Bed Bath and Beyond and other small little tidbits of information that we've been seeing, that he's trying to form a Keiretsu. The other example is I don't remember the name of that company, but there's an international shipping conglomerate. The CEO, what is it called? I'm blanking on it, Kevin. It's yeah.
Zim.
Anyways, what?
Zim, ZIM.
Zim? Is that the name of it? Okay. But I think
That's
the
a
CEO.
guess.
Okay, the CEO of that shipping company has also been in conversation with Ryan Cohen. And like, why would Ryan Cohen be talking to an international logistics company if not for, either acquisition or potential partnerships to again create a global competitor to Amazon?
Someone just said in the comments, Flexport.
Yes, that's it. Flexport.
That's it.
That's it. Yeah.
Oh yeah, shout
Yeah.
out to you. Oh, that's a Ichigo. Shout out to you. So I I gotta tell you, man, like the chat in the community is probably one of the coolest things about this whole thing, because that's how I found PB. Is they were like, yo, this other dude does a lot of this stuff, you should talk to him, and they've been on point. So shout out for the heads up there. I don't know how much you can go into a response or ancillary thoughts on that, Kevin, but I would love to hear your perspective.
As far as the holding company goes, and the bank, Peruvian, I can't remember. I can't remember if it was tinfoil or if it was real on the Teddy Bank, so I'm just going to leave it at that. Filing as a bank, I do know that filing as a bank is almost impossible. We saw SoFi and other companies try and do it for a very long time to be an FDIC bank. So a company not running it, I'm sure you can research it while I'm talking to see if there's answers on that. But as far as holding company goes, to my understanding and the wording on the earnings reports over the last 4 quarters of marketable securities, they can be a holding company. They don't have to even switch over to Teddy to do it. GameStop can buy Berkshire and Apple and Google stock today and have it on their balance sheets, which would be a holding company, conglomerate. I hate the word SPAC because of everything that happened, but they have $4.6 billion to deploy in any way that Ryan sees fit. And he's not going to do it in a ridiculous way. He is a penny cruncher. And I'm guessing because nobody knows anything about him and he had no social media or anything, that he probably works 120 hours a week like Elon too, where his schedules are at 5-minute intervals and sleeps an hour a night. So I feel like he's going into this. Number one, his main goal was profitability and saving the company. Number two is going to be either building out to maximize margins or buyout, which I think you'll only do on dips for mergers and acquisitions, or be a holding company for the backdoor to buy GameStop on cycles or other companies that he sees fit, or Bitcoin if he sees fit, because now it's a marketable security.
So kind of a wide array of possibilities, and I've seen a lot of people throwing out different configurations. The the thing I'm really interested in is to understand the way that RC might be perceiving the landscape as it sits today. And if one of those routes might look more appealing to him than some of the other routes. Again, all conjecture, we don't know. But it's, I think, an interesting exercise to try to look at it from what he might be trying to roadmap out for the company. Because the way that I saw him originally raising those funds, companies, when they're raising money like that, it's typically for some sort of purpose, not just the fact that it's exceedingly advantageous timing, which it was. I imagine as he was doing that, he probably had some ideas on, what route he might want to take it. Now, when you see GameStop closing stores, it starts to show at least some sort of underlying change in theme. Do you guys think that the store closure is going to continue and it's going to be a really core bubble of just the really profitable brick and mortar stores to open up other business lines? Or do you guys see the brick and mortar element shifting in some sort of way and potentially even expanding?
Kevin, you want to take that or I can take it?
I'll go. I see it as unprofitability if it was your own company and you have 100 employees selling something. If 30 of them have consistently lost money all the time, I'd close them out until I became profitable as a whole. And now, he's probably thinking, or GameStop, the entire board's probably thinking, how many more do we close? I mean, international is expensive. And if not profitable and they're international, it's probably a tough decision. We're bringing out of a country, like that sucks. Just like the magazine that they dropped with like 20 million subscribers. I can guess that it wasn't making money because there's no other point to that. So them canceling it was just to get as profitable as possible. But now with the PSA partnership, and I posted about this before, now they have a GameStop store in almost every single city in the United States, as far as like a big city, not a small town, where people can go get their cards graded and send them in, and it's an instant profit for GameStop on these PSA gradings. So now I would believe that it's at a standpoint of whether to close stores or keep ones open in certain places where they see the PSA momentum growing. The store's not profitable, but they went from 10 cards the first month to 100 to 1,000 within 3 months getting graded. They might keep that one open. If they saw no change in it and unprofitable, they'll probably be like, okay, let's close this one. And I think they'll be a lot more strategic with it. Same with Ryan going after shipping, just like he did with Chewy. He has a store in almost every big city with same day shipping if you want to pay for it. So your PS5 can get delivered in 3 hours. And so those are hubs across the entire United States in every single town. Imagine a mini Amazon hub with just a specific source of inventory that can be delivered to your house within a couple hours.
Yeah.
So,
And the other thing too is like, and I think, Kevin, you've talked to Ian at length about this, right? And Ian does a really good job of laying this out. That, if you look at Ryan Cohen's backstory, right? He was born in Canada. He really spends a lot of time with his father and his family. And for him, like he gains a lot of lessons and life advice from his dad. And unfortunately his dad passes away, but one of the things, or a couple of the things that his dad instilled in him, was the value of hard work and honesty and integrity, right? And so that's how he approached Chewy. So when he started Chewy, well over a decade ago, he wanted to take on Amazon because he felt that Amazon was starting to become predatory in their practices, and especially with regards to pets and pet food. So there were multiple, in like the mid to late 2000s, there were multiple outbreaks of E. coli or food poisoning with the pet food that Amazon was selling. Amazon was not doing quality control from these suppliers in China and India, and people's pets were getting sick and dying. And Amazon didn't care because, again, they're by this time in, 2010, 2011, they're starting to run a, multi-billion-dollar business. This is just one of their product lines. They have a small team of people that in customer support for the pet food section. And so you know, they didn't really care if people's pets were dying. It's just a lawsuit. You settle for a couple $100,000 and you just move on. And Ryan was, obviously incensed at this, and he's been quoted in interviews as well as, news pieces as saying like this was one of the motivators to push him to start Chewy. And so when he does start Chewy, he makes it completely like it's like the polar opposite of what Amazon is. Instead of focusing on bottom line profitability, he focuses on the customer satisfaction. He believes that customer satisfaction will drive the bottom line, not the other way around. And so, this carries through to him sending literally like they send out letters or notes to people when their pets pass away. They can even send out recurring birthday notes to people when if they've noticed that they've been buying from Chewy consistently and they have a birthday for their pet on their website, they'll send out a birthday notice. And I know people who've gotten that, which again adds that personal touch. And so, in 2015, after Ryan Cohen had sold Chewy and moved out, of control of the company, he was looking for a new investment. He was just sitting on billions of dollars of capital, just waiting to see what was next. And what he saw was GameStop being shorted, we could say even, criminally, right? Like just excessively shorted. And he saw that the board was just completely incompetent with the way that they were running the company. They were overloaded in debt. There was a $400 million bond coming due in March of 2021, and they had no plan to pay it. And they had like less than 50 million in liquid cash. And so he said, look, all this takes is for someone to come in, refocus the business on what it used to do best. And, we can turn this franchise around. And he's been, even despite the fact that a lot of people on Twitter get angry at how slow the progress has been, he has been successful in, making this thing profitable on a net basis and reducing overall expenses. And it's not easy because running a company like GameStop, a legacy brick and mortar business in a e-commerce world, is difficult. So you got to give him kudos for that. And I think that, if he is genuinely getting interested in a co-op or Keiretsu of some form, it's going to be on the same with the same philosophy of customers first, right? He had a tweet that went viral that was, protect women and children, I think, or protect pets and children at all costs. Right. And that's kind of his philosophy. And so he views Amazon as this predatory firm that's just destroyed the American, retail segment and effectively gutted the American consumer because now they have fewer options. It's just buy from Amazon or don't or nowhere because there's no other options. And I think that relates to his overall strategy. So I think we're still in this limbo of waiting to see what he does with the cash because it's a huge amount of cash. And he could do multiple things, right? He could literally buy multiple businesses and entire companies with this amount of cash. So we're still waiting but I think that things are happening in the background that they're just not able to allow us to be privy to.
Yeah. Now, one of the big elements I've curious from specifically a valuation perspective from really both you guys again is turning around brick and mortar store, keeping it at least on and profitable long enough to continue down the path is difficult, doable, but difficult. And one of the big tailwinds that I've kind of seen is just how supportive the GameStop community is of GameStop. It's like next level. There's not a lot of people that feel the way about Amazon, right? Like there's nobody from an investor standpoint and from a communal standpoint that's so stoked about Amazon. So what role do you think the community plays in the future direction of GameStop? Because it has been a massive thing that's kept things afloat to a degree to where we are now. So do you think that's part of the consideration that might go into future business plans? So taking it from the perspective of if you were RC, how do you integrate the GameStop community into future plans? Do you at all? Or do you kind of just focus on the business and hope that the community follows along?
I can tackle that. Do you want to chat
Go
or?
ahead, Peruvian.
Okay. Yeah, I don't want to take all the airtime, but in
All right.
corporate finance, there's something, and Kevin, you might know about this, but there's something called the dividend clientele effect, which is the study that whenever a company starts to issue dividends on a consistent basis, and if they're able to continually support that dividend, a strong base of retail investors as well as institutional investors become hodlers, for lack of a better term, of their stock. And so if the company continues to promote dividends and to give dividends to the shareholders, these shareholders will come in and they'll buy through bull and bear markets, through cycles, through economic catastrophe, through what have you, because they believe that they can get continual benefits from holding the stock, right, in the form of these dividends. And that creates these very strong hands that are much more hard to shake out of the market than weak hands, right? There's tons of studies showing that, for example, companies with a dividend clientele have much lower ratios of short interest, and they also are much less often the targets of short attacks, because again, it's just harder to shake when you have all these people that are holding on to the company and holding on to these dividends. Harder for them to be shaken off of holding the stock. And the same thing I'd say is true of GameStop, obviously. Like, there's a very, very huge retail contingent of investors who have bought shares, and they're essentially never selling, which is why you kind of see these price cycles move the way they do. You see spikes in price from a gamma or even like a mini short squeeze. Then we see a retracement, and it comes back down to a hard level where it just will not go below, whether that's $20 post split now in 2024, or whether that was, $4 pre-split in 2020. Like, there are these levels where it's like there's just this hard wall of buyers that cannot be exhausted. And so that's why GME is, for example, so hard to chart, is because like it just doesn't act like a normal stock. But those, that retail investor segment, by a lot of measures, and again, it's hard to actually get the exact number, but by a lot of measures is probably the largest as a percent of the company's float of any company in history. So
It is,
again,
according to
you
DRS data.
yeah,
it's the highest.
Yeah, absolutely. So I was just saying that because I was like, maybe there's some company out there that I don't know about that's fucking,
Sorry, it is the highest above $1 billion market cap, because there was a couple that tried to do it on extremely micros to try and prove crime. But as far as $1 billion company or a profitable company, they are the highest percentage of float that are direct registered in individual investor names.
Yeah. And that's around what, 25% or so. Yeah. And the one exception, right, is like Global Links with Robert Simpson in 2005, where he bought like 111% of the float and DRS did. But that was a sub like 30 million market cap company. But yeah, for the majority of companies, they've never seen an effect like this. And so the retail segments probably over 800,000 holders across multiple nations, and they're all supporting it, not only by buying the stock and holding it, but by actively going out and buying items at GameStop. Like, there's giveaways. There's tons of people on Twitter. I know Hachi does giveaways of gift cards. I think you've done that too, Kevin, for charity events. Yep. There's people who give away the playing cards, and basically that means they go and they buy like $1,000 worth of it and then give it away on Twitter for a fundraiser. And yeah, there's a level of support here that has never been seen before in corporate finance, like ever. There would be history books written about this for sure.
One of the other things I found, speaking of support, is part of what I started doing, I gotta move the chat out of the way so I can share part of my screen, is the community actually introduced me to this document. I don't know if you guys can see, but it's called the Diamond Handbook. And it's a pretty comprehensive list of GME theories. And we've been going through literally every single one of them. And I think we're close to a little over halfway through. Like we're in like over page 400 or so. One of the common themes that I've come across as I've been perusing through all this documentation, looking up the source documents and whatnot, is this has become a massive interest of mine because GameStop has become the vector through the ape community that has identified a lot of underlying stuff that looks really interesting from a regulatory standpoint. And what I mean by that is you could probably read in between the lines is it looks like there's a lot of fuckery going on. Everything from DTCC down to FINRA fines and stuff like that. So I wanted to ask you both your perspectives of the roles of these larger financial institutions around something like GameStop, specifically people that how they get involved and what their motivations might be for how they get involved.
Eric, you pointed out absolutely perfectly, and I've said this on almost every one of the space calls I've ever done. The best thing from the January GameStop saga sneeze, in my opinion, is that there's more than 1 million people now that look for corruption and data every single day against the people at the top and post it instantly to multiple social media sites. Millions that have gotten screwed between OG, AMC when it was in the basket, MMTLP, Bed Bath. There's so many people that are just trying to, that probably created some of those docs that you have in there highlighted that before January 21 might not have ever invested before or had an index fund or something. And so the best thing that came from that is that many people try and expose crime every single day. Like they all thought at the top that retail would go away and forget about it. And they didn't. Like all these people are in different communities doing the same exact thing every single day as they were 40 months ago. And they can't hide. Like eventually they have to file things. And there's people way smarter than me programming algos for notifications that are getting these FINRA and SEC filings loaded instantly to their computer and posting them across the entire world about what's happening. And I think that is the absolutely coolest thing.
Yeah, it's like the biggest like crowd, almost like a crowdfunded financial research community in history. Like there literally has never been anything like that. And again, I was on, the Reddit boards in January of 2021. And again, I used to work at a private equity fintech firm, and there were people that were, active traders at my company that were looking at it. There were people that were options traders, commodity traders. I met people through this community who are mathematicians, wealth managers, right? Portfolio managers, bankers. There's Old Man Repo, who's a former manager of a repo desk at a big bank. Like there's all these people that have just come out of the woodwork and done research and started saying like, what is actually going on? Because the GameStop phenomenon is so like puzzling to the financial establishment because it just bucks every single traditional trend, right? We saw the beginning of this squeeze play out in January, and people were in the lead up to like the zenith, right? That people were starting to get more and more agitated with the amount of propaganda from the media saying that the squeeze was over, that you should go home, don't buy the stock, you don't need to own it. And then with the Robinhood shutting off the buy button, as well as 182 retail brokers, there was just a mass outrage at the system. And so people that started putting out the meme, right? Like they turn off the buy button, we turn off the sell button. Like, I don't care about money anymore. I just want to hold this stock and show the system that this is not okay. And so that's become almost like the calling card of the community, right? We're not only, looking for wealth and for capital gains. We want to see real change in the financial system and the way that things are structured now, because it's clearly unsustainable. There's so many companies that get naked shorted, so many companies that suffer from FTDs. And, we've seen through the saga, we've seen the proliferation of like education at every level of finance. So, there were people looking into FTD cycles and how the continuous net settlement system works. There were people looking into the ETFs. Like, we found that, I mean, just in June of this year, I did a DD on the ETFs, and one of the biggest ETFs that holds GME, which is XRT, which is the Spider retail ETF, has been on the SEC threshold list for shorting for like 1,400 days. And so how can an ETF be on this threshold list for 1,400 days and nobody investigates what's going on? And so like these kinds of questions started to get raised. And for the first time, right, there's a massive retail push to get change across. And we pressured Gary Gensler and we pressured other SEC officials to change. And I think there's like been more education than anything that we could have ever dreamed about. That has proliferated across, the globe, basically.
Literally cannot second that more. It's been one of the funnest parts for me because, like I said, I've been trading for a long time, but I have learned so much about market structure, microstructure, and relationships through GameStop that literally never would have crossed my mind previously. Because my job is to look at options, throw some numbers around, and essentially make a guess. And so I normally just do that. And as I started looking at a lot of the GameStop stuff and what they're pointing out, it's like, wait a minute, like there's actually some really interesting things going on here that do not seem to make sense to me, or they do not seem to be fully above board, which leads me to a natural follow-on question, because you mentioned some of the short side and actors from that perspective. Do you guys think that there are still legacy shorts open from the original squeeze that have just been moved into different financial instruments and perpetuated? Or do you think that those have been satisfied now and it might be a new group of shorts?
No, absolutely. Absolutely. I think there's still shorts stuck here. I mean, if you read, and again, like this might sound to a lot of people like a, 4chan conspiracy theory, but you read the House Financial Services Committee own report on GameStop. It's like 182 pages. I read the whole thing. And you know what they say? In their own words, they say, according to our analysis of internal SEC data, this was not a short squeeze. Shorts were never the majority volume in this squeeze. It was just retail buying and gamma hedging. That was it. Like 2021 was not the end. That 120, 140%. Some brokers, FINRA at one point was printing 260%. Ian Carroll sent me one at 313% short interest, right? None of that was fully closed by the House Financial Services Committee on report. And so if they weren't able to close in 2021, like how are they able to close now without causing the price to spike? And so we've tracked them using swaps and derivatives and other instruments to just move their obligations forward and just try to kick the can continually. And Archegos was also an example of that, right? Like GME was name dropped in the Archegos lawsuit when they collapsed, and there's also evidence, tangential evidence from Archegos's excess capital premium charges, which are the charges that are assigned to them by the NSCC as like basically their liability for their stock portfolio. And you see like their excess capital premium spikes and forms the exact pattern of GME in late January and early February of 2021. And they blew up in March of 2021. And so like the evidence is there that it wasn't just right tinfoil conspiracy theory that these shorts didn't close and that they used derivatives and swaps or total return swaps to try to hedge exposure. They were actually doing this. Now the question is how many other shorts are out there that are still open? We don't know. And it's going to be really hard to know because again, and I think Kevin can expand more on this, right? They've changed how they calculate short interest so that they can't go above 100% ever again. So the
Well,
formulas have been changed.
yeah, and I also think you highlight another thing because I spent a while because again, derivatives is kind of like what I do. It's like the only thing I know anything about. And the tricky part with something like swaps is you can get details on them, but a lot of them are black boxes. You understanding the specific terms of them are difficult. Now, that leads to a follow-on question though, which is with some of the at the markets and new shares being offered, shorts would have been given several opportunities to finally take an exit at not blow up levels. Still uncomfortable. Still, they're gonna eat their lunch, but not necessarily go through implosion. So then, why maintain the cost of carrying the shorts? Is it you think they're approaching it from the this is an eventuality where this thing is gonna roll over and go out of business? And if so, most of them are going to be using Bayesian models, which as a company starts to acquire several $billion in free cash, the probability of that business going out of business in the near term starts to become less likely. So then do you think that might influence their future decision to continue maintaining the shorts or not?
Kevin, do you want to answer that, or I can tackle it too?
No, I got it. Let's go. That was a serious question there.
Well, good. I have nothing prepared, so I'm just going off the dome. I'm hoping this stuff isn't terrible.
No, it was amazing. I'm just trying to remember the points from it. So when it comes to shorts and clothes, Peruvian put it perfectly. They even said it. Since then, I do believe there's a massive position in Archegos bag because everyone that touches it goes bankrupt. And someone's holding that. And I posted about it yesterday, but I haven't found any answers. I haven't been on X yet today, but I posted the report's supposed to come out on Friday for UBS of what they're holding in their bag from Credit Suisse. And then someone in the comments said that they put it, Switzerland said that it's going to be archived for 50 years before it gets released. And so I have not deep dived that. I'm sure Peruvian's not going to be able to sleep because of that comment and try and figure out which one of those two before tomorrow morning. That would be epic if it comes out finally. But I think the position got too big on the basket to close for the market maker swaps financial instruments. As far as hedge funds go, they could have closed at any time because, like you said, the at the money offerings, but that's the worst time because retail is hitting by almost ungodly high in volume when those offerings have come out. But market makers proved in May when 500 million shares traded, and we know it wasn't like people selling, that they can get out at any time as far as small shorts. Like if they were shorted, 100 million, a hedge fund, not a market maker or someone with tens of billions of dollars of securities sold, not yet purchased, but they had the liquidity the last 4 years during the run-ups and the cycles and the hype and Roaring Kitty and all these to get out of it. They weren't going to cause buying pressure, right? Retail was already doing that, and by the time we see Friday's market close, it's back down to max pain, and everyone got screwed because it went up 50% and dropped 40% within a week. So they could have gotten out as far as a hedge fund goes. I want everyone watching to also separate a hedge fund, just like a small office or even a big office, billion to a couple of billion in assets, versus market makers with trillions of dollars of orders that come through every single day that they are allowed to legally counterfeit shares and go try and find them. And if they can't, they put them into different derivatives, trade between each other, all these other things. And so I do believe they could have gotten out of it. Liquidity was there based on market makers exception to create liquidity for everyone during those cycles on the bid and ask. There's no way 50 or 500 million shares sold in May from retail investors, right? It was synthetic that were going to have to be delivered, and then we saw the June run up right after it again.
Mhm.
What do you guys think the current positioning is then for start maybe market maker side of things and then hedge fund, high frequency, whatever other you want to bucket into that institutional component? Do you guys think that if you were to divvy up the current shorts that may or may not be out there, where do you think they live as a percentage wise between the entities?
I mean, this is where it's hard to parse it out, right? Because again, some of the swap data shows, wildly different figures. But we looked at in 2021, obviously there was the infamous Brazilian puts, which were actually found by Lawson, who's a finance professor, very smart guy at a Bloomberg terminal. He found this subsidiary of Credit Suisse in Brazil that held 80% of the float of GameStop in deep in the money calls as well as puts or out of the money puts. And so the question is like, why does this Credit Suisse subsidiary have 80% of the float in like call options, basically? Like what are they doing? And when he reached out and asked them what was going on, a day later, the data was erased from the Bloomberg terminal, and the support team told him, "Oh, that was a data error. That you should
Never
never
mind
see
that.
that again. Don't worry about it." And he's like, "Whoa, whoa, whoa!" He's like, he's never seen that before, right? That there's a data error, quote unquote, of this. But that was 80% of the float with a single entity. Now, Credit Suisse was a prime broker for like dozens and dozens of hedge funds, right? That were short GameStop, Archegos being one of them. There's also a smaller hedge fund that was following along Archegos' footsteps. I don't have their name confirmed yet, but Dario, who's another banker and finance guy who's writes on Twitter, he shared with me in our podcast that we did last June that there was a couple other hedge funds that he knows personally were in on the GameStop trade and that were trying to use swaps to get out of their short obligations. And so if one prime broker, which may even be the largest prime broker that was facilitating shorts against GameStop or swaps against GameStop, if they were 8% of the float, then what were the others? I mean, at least probably around 120, 140% at least. And the swaps that we saw rolling over this summer that were contributing to the price action were also around. I mean, some of these were massive. They were like, in terms of share count, some of them were 20% of the float in a single swap rolling over the course of a week. And that was just from the data that we could scrape together from like the CFTC. And so if it's hard to give you a hard number on like how many shorts are still out there, but I would say well over 100% of the float is probably still short.
And
Peruvian.
of the entities that have shorted though, like splitting between market makers and hedge funds, other kinds of shop style institutions, do you think most of the short float, whatever the total number is, most of that is with the market making side of things? Do you think that it's within the hedge fund side of things, or do you think it's 50-50 split? The reason why I asked the question is because the impact to the market and the way things would move would vary quite a bit based on which of those conditions it might be. So that's the premise.
I think it's mostly moved to the derivative side of the hedge fund book, personally. I mean, the market makers, right, they're much more agile and they also have many more loopholes to work with in terms of kicking the can down the road. And so they don't even have to really use swaps in the same way that like a hedge fund or a private family office would have to do. They can use just the market maker exemption and continually kick the can. And so it's much easier, like you said, it's much easier for structurally for a market maker to avoid actually making good on their promises in the form of stock loans for long periods of time. And so I think that market makers have largely probably cleared out their excessive obligations, and it just rests on the swap side for hedge funds and banks.
Interesting. Kevin, your thoughts?
Peruvian, do you think the swap rollover at the end of spring, the May-June swap rollover, caused the price action? So you've seen every quad witching and swap rollover for 4 years, right? And how many
Yeah.
came true with a big bump up? Zero. Would you not contribute that to Roaring Kitty at the time
I would.
Obviously for May, right? And then
Mhm.
June would have been my presumption, sorry to cut you off, would be the T plus 35 on other firms, and kind of just an entire week of, or entire 2 months of him tweeting stuff compared to that swap finally causing something. Because how many hadn't?
Yeah, that's accurate. But if you look at Richard Newton's some of his work, like he's tracked it back to 2020, 2021, and again, it's kind of like what you say, like some of the swaps roll over and they're large, and then the price barely moves, it's up a few percent or it's flat. And then other times there's a swap rollover and the price goes absolutely ballistic. And so my theory is that, May and June were particularly large swap rollovers, as well as actually November and December that we had a swap rollover.
And who would
I
be
think like
looking
December
to
15th.
tweet when they saw the
Yeah,
swaps extra big?
yeah, Roaring Kitty. And so, and this would also kind of answer, right? If he understands the swap cycles this well, and like their obligation cycles and when they actually have to hedge, like this could explain why he came back with, what was it, like triple or quadruple the amount of cash that he left with in 2021, because he disappeared in 2021 with like, what was it 80,000 shares or 800,000? It was 800,000 shares, I think, and he came back with 5 million, something like that post split. And so it's like he 5x'd, more than 5x'd his position. And everyone was like, wait, like Roaring Kitty has $250,000 or $1 billion. Like he has 200 million. Like what? How did he grow? Like he's now the size of a private family office or hedge fund, like a mid-sized one. Like he's starting to get up there. And so yeah, I don't think it's unreasonable to expect that he understood this. And there is some evidence, right? Like if you look at the swap cycles, they were much more consistent in 2021 than they were in 2022 and 2023.
Absolutely.
2024, we had swap rollovers in March and April that were small to mid-size that didn't have any impact on price. And then we actually did have a big, really big one at the end of May, and then a really big one in early June. And Roaring Kitty's tweets were exactly timed with the expiration of those swaps. And I don't know if you know Finance Lot on Twitter, but Finance Lot was another guy who was like a trend follower and chart analyst and financial analyst. And he asked me for the FTD and the swap data, and I sent it to him. And after looking at it for like a day, he said Roaring Kitty's next tweet is going to be June 3rd. And he's like, right before, he's like, if you look at the pattern, this is what he's going to do. And I thought at the time, I was like, no, I'm like, I think he finished tweeting in May. The price went back down. I still held on to I bought some more shares, but I'm like, just chilling here. And then, what came to pass? June 3rd, he starts tweeting again. And then the price starts rocketing again. And so I think he probably is playing the cycles and he knows about them, and they're probably exacerbating his moves. But I think that he is having an impact on price, obviously. I mean, there's probably algos out there that are smash buying Bitcoin every time he tweets because they're just trying to front run retail liquidity.
We saw it 2 weeks ago when
Yeah,
I was on the airplane.
definitely.
A million share purchase within seconds
Yep.
of his tweet. And that's why I tweeted at him too. I was like, why don't you just do this like late on a Friday as well? It's not market manipulation to tweet a picture of a high five or something, or just say hi and then delete it instantly. The algo is going to buy a million shares and the option is going to go from a penny to $1 within seconds with absolutely no market manipulation. You didn't buy those shares.
Mm-hmm.
Someone else did on it. And then he decided to ignore me and then do the same exact thing on Monday morning after that with the 109 and 420 tweet that he had was 3 days later. I was like, God.
Cycle
So
theory
funny.
is so fascinating to me because I've done a ton of research and trying to regress it to see if I can identify an actual trigger based on the swaps. And I think one of the issues with it for it having any efficacy is that we don't know how they settle, and we don't know what the requirement is come settlement, because they can always just make a new one and they can change the contents of it. So the one of the series that we did actually on the live streams that we typically do on Saturday, which is GameStop specific, is we literally went through every single one of Roaring Kitty's YOLO tweets, and I made an entire tracker for every single trade he put on, what the account value was, changes in account value, and what the positions that he put on, to get a sense of his trading style. Because I was actually really surprised that when I went all the way to the beginning, that he started with all options, which was very surprising to me, because from the communities, I don't know, from like the sense I get from a lot of the community, it seems like options were like a bad thing. Like you weren't supposed to talk about them, they were telling me, and stuff like that, which was interesting. So have you guys done specific research on not just the swaps that we think might have led to price movement, but just swaps impact broadly across all of them? And the reason why I ask it is just because one of the things I notice when I look at the GameStop community is people do tend to have a bit of a confirmation bias in data mining, where we have something that we want to see as true and we go looking for that. And I have a stats background, so a big part of what we typically would do is look for the other side, right? And like a broad analysis. And I'm so fascinated by the broader research around swaps because of how nebulous they are. So to summarize that really long thought into a succinct question, I'm wondering if you guys have done like specific research on the swaps as an entire group to see market impact. And if so, are there specific trends that we found, like certain expiration swaps or certain entities in the swaps or anything like that?
So that's a really good question. I really love the caveats you give there, because I don't know if you watched my swap videos on GameStop I did back in June. But I said the exact same thing. I was like, look, guys, I would love it if I could perfectly predict GameStop's price movement from these swaps. But the caveat that I gave obviously was the problem with these instruments is that because of the opacity of the counterparties, we don't know how much is hedged. And so if you have a total return swap where you have a prime broker and a hedge fund, and the hedge fund says, I want to get exposure, I want to get synthetic exposure, short exposure to GameStop, but I don't want to actively go out and short the shares. Can you do that for me? And then I'll, set up this swap where I'll pay you a fixed interest rate above prime and give up these other stocks as collateral. And then you can basically give me exposure and pay me anytime GameStop, collapses. The prime broker could either hedge their position 100%, they could hedge their position 50%, they could hedge their position 0%. Like no one knows. And so because that data is not available, the problem with these swaps is that some of the swaps can be huge. We're talking billions of dollars. They can come up. And if they were fully hedged on expiry, or if they get rolled over, they just roll over and then nothing happens to the price, because the prime broker, right, the hedging entity in this case, never actually has to go out and buy the shares to cover a liability, because A, they either already have them, or B, they can just roll it over. And so when we look at the actual swap data, it's very important to be mindful that as much as we want to be like hit the hopium pipe and say, hey, this is an absolute guarantee of where the price will go in the next, 1 month, 2 months, 3 months. Here's the times when it will spike. Buy options right before, sell at the top, then buy puts, let the short it back down, and then you'll just profit. If I had that money making machine, I wouldn't be here talking to you guys. Unfortunately, I'd probably be on a beach in Tahiti, sitting around with millions of dollars. And so, yeah, they're not like, these cycles are not they're not predictive enough to actually make movements on. Now, what is really interesting about the swaps is there's a couple things. So first is that almost all of the swaps are not pure, what you'd call like a pure total return swap, which is where they're based on a single security. They're almost always portfolio swaps or basket swaps. So what the entity is doing is they're not just shorting GameStop, they're shorting a basket of stocks, and then they're also hedging it with longs that are another basket of different stocks. And this is exactly what Bill Hwang did. So if you use him as an example, right, he created he created total return swaps, which were basket swaps, which were long Viacom, Paramount, and then a bunch of Chinese stocks. And then he was short GameStop, AMC, and a bunch of retailers that he thought were going to go down in 2020, 2019, 2020, and 2021. And so the problem that he ran into and why he got like his capital got just absolutely destroyed so quickly, like he lost, I think, what, $8 billion in a single day, is because not only did his shorts in his swap move against him, his longs also did. So Viacom, Paramount, all of those stocks had entered bubble territory in February of 2021, and they all started correcting hard. And he got margin called on both ends of the swap, and he could not obviously cough up the collateral because he had leveraged his firm something like 8 or 9 to 1 on the base equity, and so he was just blowing up. And then now there's this huge toxic bag of liabilities that the banks have, right? All these shorts on companies that are racing higher, like GME. I don't know exactly his short position amount, but given on the excess capital premium, right, he probably entered around $10, $20, and the price was $300 in 2021. And so he was deeply short on his GME shorts, or deeply underwater. And then his Viacom and Paramount stocks were down like 30% in the space of 2 months. And so he was just obliterated. Now these banks are holding these liabilities and they have to figure out what to do. So yeah, to make a long story short, like what's interesting, I haven't done a deep dive on the, like analyzing, oh, is our total return swaps better at, maybe slightly better at predicting price? Do they have a 0.2 correlation with price, and the portfolio swaps have a 0.1 correlation with price? Like, is there any relationship there? I haven't gone that deep into the data yet, but I do know that from my look of it, it was never a single GME swap that was just pure GME. It was always basket or total return, or total portfolio swaps. And they almost always had the long end of the swap either denominated in USD or euros, and they were also holding, large cap US stocks as like collateral. So it was like, when I looked at it, it was Apple, Microsoft, Tesla, things like that, like things, and Nvidia too, like things that they expected to continually go up.
Do you have like a reliable source for as comprehensive of a data set of the swaps? Because I only have pieces of it, and I haven't found something that I fully trust. But if either of you do, I literally, as weird as this is to say verbally, I would love to do the analysis on it, because like I love looking at this stuff. I just haven't found like a solid data source yet that like I fully trust that it's comprehensive enough to be able to walk away with conclusions.
Sure. I mean, I have like here, I can even, let me pull it up. I still have the old GME Master Archive as well
That would be
as,
that would be super helpful. And then in the
yeah,
meantime, for those hanging out in the chat, first, thanks for coming and kicking it with us, talking about GameStop a little bit. A big reason why I think GameStop is super cool is because it connects people from lots of different backgrounds, right? Like even the group that we have here. And for me, I will always be a trader, and a big part of what I try to do is objectively analyze things. So that's actually what I hope to do with some of the swaps, is to be able to just literally regress it and then see what actually shows. Because my guess is that there might be I don't think swaps writ large. I haven't found really predictive qualities around that yet, but one of my further guesses is that some of the sub qualities of the swaps might be predictive, but I don't have a large enough data set that I trust enough yet.
yeah, absolutely. I mean, I've gotten, was it Linux? And then, what's the name of the other, there's another guy on Twitter who was able to scrape the data for me and send it to
Well,
me.
yeah, I
Um,
I can
yeah,
hit you up and see what we can get. And then for those in the chat, if there's anything in particular that you want to ask any of the dudes, you could start throwing them in now. We probably have like maybe 10, 15 minutes or so. I don't want to take too much of these guys' time, but as always, I'm
sure.
stoked to chat with you guys. While you guys
I
are
can,
thinking of, oh, sorry, go ahead.
I can show you if you want to look at the swap data right now. I can share the screen.
Yeah, would love to.
Sure. So let me make sure I'm sharing the right screen. Just a second.
Oh no, let us see the
Uh,
other screen. Let us see the screen with all the gremlins on.
no,
I want to
all the
know.
gremlins.
Yeah, dude, I want to know what your sources are. I want to know. Yeah, let's get through that search history.
Yeah, well, no, my search history is pretty boring. But yeah,
Not for
so
us three.
you wanna learn about, the history of central banking and all
Yeah,
the How
And
to monetize a YouTube channel. Those are my two main searches.
and how far back does this go?
So, okay, so like this one goes back to 2020, I believe 2022.
Well, it looks like I see 19.
It might. Let's
What's
do
column K? We don't have to spend too much time on this because I can parse through it.
this
But
is
this looks like a
execution timestamp. So when the swap was actually executed.
yeah, okay.
Yeah,
And
but again,
how
like
far
this
back
is
does
Initiated or closed when you mean executed?
yeah,
executed means initiated, I believe.
okay.
Yeah. Yeah, because so some of these, what's so interesting is like some of these will show, like I actually was able to dig through the data, and for some reason my other Excel file where it actually like broke this all down got corrupted. So I had this all organized to make it look really good and so you could understand it, but in June, but when I reopened it, it was like gone. And so I was like, oh shit. So this is like the original file, but so what you can see with some of these, like what's really interesting is some of these will be callbacks. And again, you would have to like scroll all the way through this to find which ones are like that. But some of these are like callbacks where you'll see like the execution timestamp, and the event timestamp be different. So it'll
Yeah, yeah,
be, like
yep.
basically like the event happens on, let's say like January of 2021, like January 5th. And then you'll see basically like a callback to another swap. So it rolls over and it says January 5th, 2022, and it says executed. And then some of these will um lack a lack some of these timestamps. So those ones are sometimes the like if they're like increase or termination, they're sometimes like mismatched because you see that like they're basically being rolled over, they're being canceled, or they're being swapped for something else. But the data is hard to parse out because again, it's been hard to find people like, okay, these are examples where these are like corrected ones, right? So these are corrected swaps. So there's no event timestamp, but there's an execution timestamp. So you know that like these are older swaps. And as you can see here, I'll zoom in. These are all basket, right? Basket swaps. Up here, it was all, oh, whoops, that's too much. Up here, it was all equity. It was contract for difference, I believe. Yeah. So look at that. These are all contract for difference. So CFDs are kind of similar to single stock swaps in that they're just like you basically get paid on the performance of a security and not you don't actually have real exposure to the underlying. But what's hard about this, right, is I've worked in finance, but I've never seen data like this. And I've reached out to people on Twitter and there's no one that's willing to help me like understand exactly what all these things mean.
Yeah,
But yeah.
I probably am the last guy to help you understand what it means, but what I can do is very easily identify relationships between these things and movements, which again, I'm the village idiot, dog. It's like I'm
Mhm.
trying to trade. So if I can find stuff that leads me to tradable ideas, that's how I prime my brain. But honestly, as I'm going through it, joking aside, I can probably parse through a bit of this. So yeah, dude, if you don't mind, I'd love to get a copy of this from you, and then I can start running it through what I have. But I think we'll be able to at least understand yay or nay. Just different qualities of this and then subsequent impact. Because another thing is, all of you know, when analyzing something like the stock market, it's really difficult because it's multivariate. So even if there's some sort of correlation between this coming up in some degree and then price movement, there also can be other stuff that leads to the price movement. So what I do is I keep a track of like all key events so then I can overlap like is there a news event that happened to come on that day as well so that we can try to actually get to a decent answer. So I'll
Yeah.
happily go through this.
Yes, so this is exactly what I was talking about. So you see the contract for differences are like those are like the single entity swaps that are all this is GME and the dot N stands for NYSE for North America. So it's like a denominator that shows like this is literally American GME stock because there's GME that trades in Europe or in other countries. But when we get down to the basket or portfolio swaps, you can see here like the long end of the this is the what's it called? I should probably
Like
freeze it.
Peruvian
Underlier
new
leg
stands
one.
for New York Stock Exchange.
What?
New stands for New York Stock Exchange.
N stands for NYSE. Yeah, New York Stock Exchange. That's what I was told by someone who's traded, derivatives before. They're like, oh yeah, that's a denominator that helps the it's like an internal backend thing to make sure that they know it's that for NYSE, not GME
Yeah.
on another exchange. But you can see here, like, look, you see the underlier leg one, AMC, Chipotle, Coinbase. I don't know what DT is. I don't know what N is, but 5N, OQ, GME, or the N is sorry, that's obviously the GME.N.
Peruvian, we
But
can't see what you're on right now.
Yeah,
oh,
I
you
You're
see.
can't?
Yeah, it says
you're on
zero.
termination right now.
Wait, really? That's
Yeah,
weird.
it's like it's sharing
Uh,
part of your screen.
Wait, let me try to
Which is weird
reshare.
because we could see the cursor.
Yeah, I can see the cursor going, but whatever screen
Yeah,
you're on. That's why I was asking about the new, because you were on new when you said New York
there we
Stock
go.
Exchange.
Can see
Can
this
you
now.
see
There we
this
go.
now?
Yep,
Yeah.
Can you see
yep.
it? Okay.
Yeah, put it on a letter.
On a letter?
You're on the right side of an N. No, I'm just making sure your cursor's in the right spot.
Yeah, so you're
Okay.
GME.N.
Yeah. So these
Okay,
are
perfect.
so yeah, for a large part of the spreadsheet, these are these contract for differences, which are these
Mhm.
like again similar to a single swap, a single equity swap. But when we get to the portfolio swaps or the basket swaps, you can see here. So it's AMC.N. So that's AMC US, Chipotle, right? Coinbase.OQ, DT. I don't know what DT is. I don't know what stock F is that Ford? Might be
Yeah.
Ford. 5N, I don't know that one. And then you see GME here again, and then you see Grab. And so a lot of these swaps will have like, again, you'll see like massive chunks of them that are just the same, it's like the same basket of 5 or 8 stocks that they're shorting or that they're long or whatever. And here's another one. Same thing, just slightly different order. Yeah. You just see like the
Yep.
same thing over and over again. Oh, here's one with GME and Robinhood, and I don't know what Grab is, if you guys know what that is, or 5N. But yeah, whoever this is, they're shorting obviously a basket of entire stocks, and then some of them will have a long leg of this, like it's a portfolio swap that's structured in a way where they will actually have a long and a short end of the swap, and then you'll see their longs. And again, what I've seen historically is that the longs are like Nvidia, Tesla, Apple, Microsoft. It's like the big name blue chip tech stocks.
And from this, just out of curiosity, how do we know that there's a long and short? Or are we just coming up with a reasonable assumption based off of what we can see here?
It's just a basket.
Yeah, because
It's
that's
a
what I thought. I just wanted to make sure as I'm going through this.
It's because underlier leg one is usually the collateral that they're requesting, right? It's like that's the first leg of the swap is what they want to receive shares of this. And so the assumption is the entity who is originating the swap, who is asking for the swap to be created, is short these companies, and they're asking for a stream of, basically like synthetic exposure to these shares. And so because this is the first leg,
Yeah, no.
that's
I
what they want.
understand the broader point. I was
Oh,
clarifying the difference between like knowing, like we know and can prove, versus we're making a reasonable assumption, which it sounds like we're just making an assumption, which is fine.
reasonable assumption.
Yeah,
Yeah.
yeah, cool.
Yeah.
All right.
Awesome.
I would love to grab a copy of that though. That would be absolutely sick.
I can send it over. Sure.
Yeah, cool. And then
Peruvian,
I want to. Oh, go ahead.
What's up,
someone in
Kevin?
the comments just said, Jesus said, is this like CDOs? Yeah, it's exactly like that. At the end of the Big Short, where nobody can figure out what the hell is going on, is 100 times bigger than you think. Yes. And Eric,
Tons
what
of
you said
leverage too.
earlier with the data and everything, you'll never see all of it. You can't tell at the end what was closed or
Yep.
rolled for a few months as far as like instant data, because it doesn't take that long. And you can report tens of billions of trades wrongly or not at all that just came out between 2013 and 21 for Citadel. So I
You
just
just
don't go
pay
off the
like
data.
you just pay a few pennies. You're
Yeah,
good.
like 10 years later.
Yep. Yep.
So yeah, that swap data is like the ones that have to report. It's kind of like hedge funds or individual investors that are shorting something. When you see short float as far as what's reported, just remember that every single top brokerage gets fined for misreporting every single year when they don't do something right, and they're doing that for a reason on certain exact equities.
Yeah.
We made
And
I
there's
made a Go
Eric,
ahead.
sorry, I don't know if
No,
you've
no, go ahead.
read Adabit's work, but Adabit did like a really good deep dive on like, it was like Goldman Sachs, Bank of America, like, Jeffries, like all these investment and commercial banks that have been mismarking, long sales or short sales as long. They've been misallocating customer securities to cover their own positions. They've been misreporting short positions. I mean, it's literally like once you start reading it, and it's like you go through page and page and page and page of lawsuit from the SEC, and then they only get a few $1 million fine or a $20 million fine, and no one ever goes to jail. You realize that it's endemic to the industry. I mean, this is what they do professionally, basically.
Yeah,
I
it's
got,
I
so go
going
ahead,
through
Eric.
yeah, I was just gonna say I was running through the comments here. I was gonna grab a couple of those if you guys are ready for a few of those.
Sure.
Yep.
Sweet. One of them is one that I've actually spent a while taking a look at from Fozzie T, and it says, "Do you think Kitty has methods to perfectly time his trades that we haven't completely figured out, or is he buying leaps and waiting?" And I'll answer. I'll start. You guys can pile on whenever you want, but I look through. I call it fingerprinting. You can come up with a way that different institutions, entities tend to do business, and like I said, we went through literally every single one of his trades, and it's possible. It is possible. I can't prove one way or the other. But what I can say is there's nothing based on what we've seen from what he's posted that would indicate that being the case. Because if somebody has the ability to perfectly time stuff based on what he's posted, his portfolio has gone through 60% drawdowns, 80% drawdowns, then doubling in a half 2 days later. Like that's not a function of perfect timing. He's held through periods where if he captured profit, he would realize more money. Then during the subsequent drop, can buy in with even more. That being said, the natural question is, where does $250 million come from? And that's why I think it's reasonable to say it's possible. So my thought on that question specifically is that we can't tell specifically because nobody has a look inside his book. I've not seen all of his trades, so I couldn't tell you. But based on what I have seen from what he has posted, it does not seem to be the case to me. But I don't know if you guys have an opinion on that one.
I don't think Roaring Kitty has to worry about any cycles or anything anymore with his power of posting. As far as
I like that power
Nah.
of posting.
like, he's got the golden ticket with no market manipulation. Posting a picture of a Time magazine, like everyone's like was commenting on my post about buying the $30 calls 10 minutes before the market closed on a Friday, like, oh yeah, I'm sure he wants to go to jail. And I'd be like, well, try and prove market manipulation on that. Like it took 5 years to prove it on Elon and make him pay a fine that he actually posted we have a buyout for this price. That is 100% market manipulation on a tweet. Like someone's going to buy out Tesla for 420 a share. Posting a picture of a cat and a stock goes up if he didn't place any trades or if he bought them a couple days before, whatever. Yeah, there's nothing to that. So in my opinion, his strategy's changed into one that's less frequent, perfectly timed, and is going off of just his holdings. He'll post his YOLO when he's ready, and then it will probably be after a month or more after he's placed these trades with a random tweet. But he doesn't want to be on the hook for, buying everything before a YOLO post. That'd be different than a random meme because he's shown his positions. So, going through his posts for the last couple of years, he was onto the cycles, onto the short interest and everything early. But in my opinion, now it's just going off of his power, his roaring power.
And the other thing too, right, is like even if he is saying, "Hey, I really like GameStop, I think it's an attractive investment or something like that," that's not illegal, right? I mean, Jim Cramer goes on TV every single day and says, Apple's a buy. And he has like a giant
At the
button that says
buttons.
buy, and he smashes it and he says, go buy Apple if you're, if you're smart, if you know what's good for you, or sell MicroStrategies or Bitcoin, sell it, sell it, sell it. And there's never any investigation onto, what his actual portfolio moves are.
He found a loophole with his charitable fund.
Exactly.
That's the day I started my charity,
That's
was that
exactly
I
correct.
might actually be able to give. I mean, I had this goal forever of getting personal finance into schools. It's ridiculous. We learn how to line dance and play the recorder instead of learning about money. It's all part of the plan.
Yeah.
But I started, like, I hit the button to go file for a charity because once the fund grew big enough, I could post positions that the charity could go into or not. And it's not going to be from myself or financial advice or from my firm as a fiduciary, but it's going to be for charity what we think is best for that fund and what positions we go into or get out of. I was just going to mirror Kramer, but do the right thing instead of read off the teleprompter.
Excited to see too, like the ebb and flow of that, like what it actually materializes into and whatnot. That's fun. Yeah, that's sick. I have one more question from the chat that I think will be fun for us to end on. It's very thematic. This one's from yesterday in gaming. It could be today in gaming, but it's specifically yesterday in gaming, by the way. What exactly would it take for the shorts to finally be forced to close? What's the checkmate? How is closure achieved, emotional and financial? Now, one quick caveat. Obviously, something like emotional closure is one entirely, that's up to the person.
It might never be.
Exactly. You're probably never going to
After
get
what
that
we
necessarily.
discovered.
But from a structural question on what eventually causes the shorts to close, I think that's a great question. So what do you guys think?
So, yeah, do you want me to go ahead? So I've
Yeah.
been banging the drum on Twitter for this for a while, but look, I think there are two things, or maybe say three major catalysts for closure, right? One is the actual bankruptcy of these funds and the forced, basically like a forced wind down of these entities that have been short to GameStop, and the liquidation of their assets and the closing of their liabilities, which would be closing their short positions. The other would be regulatory crackdown across the sector, which would require, right, the SEC to be completely reformed, for them to ruthlessly go after all shorts, for them to scrape through the continuous net settlement system and the DTC's internal data logs and find out who is short, and basically go with policemen and FBI agents and go to those firms and say, at gunpoint, you are closing today, or you're being arrested and you're going to jail for life. Like, that's the non-negotiable. And then the third is price action. So as we've seen, like, whenever the price has moved too high and too fast, we have seen pressure on the shorts to begin closing. Again, like, there was some short closing in January of 2021. There was some short closing in March, but it was minuscule compared to the overall volume. It was like less than 10%. But there was some. And so we know that when these price mechanisms get distorted, when the price starts to just rip and rip and rip, there is, there are obviously like risk management algos in the market that start forcibly closing, including some that start forcibly closing positions against the will of the hedge fund that is short. That's why Melvin Capital blew up. So people who say that we have no impact on the market, that's completely wrong. We do, absolutely. The question is, how do we get that price action? How do we get the price to move upwards in a very, aggressive and rapid fashion? And I think one of the ways that that GameStop could do this is by acquiring Bitcoin and essentially following the MicroStrategy's strategy per se, right? By adopting, intelligent leverage, but they could do it in a better way, because MicroStrategy is like the degen, crypto gambler who's just issuing billions of dollars of debt and smash buying Bitcoin.
Yeah, dude. As soon as Bitcoin goes down a little bit, MicroStrategy's they're gonna have fun.
Oh yeah, and they already have, like, my MSTR is done to like 330. Like I know people who bought the top in options at 440, and I bought some options. I sold them in the 400 range. Most of them. I have one
Good
June
boy.
call that I'm holding on to. The rest of my January calls, I was like, dude, there's too much risk on the table here. I cannot hold on to this.
I love that.
Yeah, but overall, like the strategy has worked. MicroStrategies has had like a 2000% increase
Mhm.
since August of 2020. So it has worked. And so if GameStop could do that, but in a much more, maybe measured and less crypto
Sustainable.
degen way,
Yeah.
sustainable. Yeah. If they
Yeah.
would just buy 500 million of Bitcoin and say, hey, some of this, 20% of this excess cash we're going to put towards Bitcoin, and any excess profits we have, half of them will go into Bitcoin, the rest will go into cash balance. That would be a completely reasonable and affordable way for them to DCA into Bitcoin and gain Bitcoin exposure and potentially add a huge upside catalyst to their price. So that's what
Yeah.
I've been talking about. And actually, I have a group of people that I'm working with, and we're working on drafting a proposal to the board to formally ask them to consider this strategy.
Well, as long as the word YOLO is in there, I don't see how they could deny it. Just
Yep,
yeah, just
absolutely.
I gotta bounce in like 10 minutes, but I know Kevin, there was a couple of things you wanted to hit before we wrap up. So I'd love to do that. But I'd also love to comment quickly on the fact that it seems like a lot of people have some sort of issue that you have a green screen. Meanwhile, I'm sitting here with a fucking t-shirt and a halo above my head. So I think you look great. I think the screen looks
Thank
good.
you.
So yeah,
Appreciate it.
you're
Yeah.
welcome.
I built this office today.
Yeah, that's good. With your own hands. That's the secret.
Yeah,
Is long, yeah.
yeah,
As long as you build
yeah,
it, they will come, they
yeah.
say.
I had this dartboard that just showed up too in my office because I realized I love darts, and for some reason, when the sun started blasting my eyes, I switched positions, and now my dartboard comes through completely clear. Uh, Before I get to my question, did either of you guys see the data on the 594 put on SPY yesterday? Went from a penny to $11.23, 100,000% gain yesterday. And I was like,
Jesus.
well, there's no way I'm betting on it because I've tracked every single Fed meeting for like 4 years, and usually it's a theta gang day. Like if the market's up and the Fed meeting happens, it closes flat. If it's down, the Fed meeting happens, it closes flat to just because it's higher IV for the Fed day, right? With rising and lowering interest rates. And then yesterday just imploded for absolutely no reason. I mean, I'm stoked it happened, but they haven't missed a prediction in like 40 years on Fed rate cuts or raises. And so it was all priced in. And then the market has its worst day in years. And I'm like, okay, well, this is probably something. But my question for you guys, going way back in this call to the community of GameStop, what is your best theory on why GameStop discontinued its logo clothing besides my theory of rebranding? What's your best theory on why they wouldn't sell these anymore and they went extinct?
First, because I don't have an educated opinion on it, so I'm gonna shut my fucking mouth and give it to PB.
On what specifically? Sorry.
So all the clothing's gone. It's been gone
Oh,
for 10 months. There's a million shareholders out there that loved buying it and wearing it. A bunch of shills in the comments on my post were saying low margins and stuff, but when you buy a million t-shirts from China, I'm pretty sure margins are like 75% profit
Not so bad.
on the quantity. Why did they stop them completely?
I don't know. I mean, the question is, what are they selling, like shorts, like workout shorts? Because
No, they
maybe they
had
wanted to. Was it just
t-shirts,
Why did they
shirts and
stop?
hats?
t-shirts, sweatshirts, socks, shorts,
Mm.
sweatpants. Uh, they had a bunch of merchandise gear that people were buying hand over fist. They almost always said sold out, and you had to go find them in like a physical store. Why would you stop making them?
Okay, I don't know. I mean, maybe their excuse is like overhead or like having too many employees manage it, but I feel like that would be a really easy thing to manage. I know Ian Carroll manages his own like clothing store like by himself, and it's not that
And they have
that
distribution
hard to
centers
do.
too, so the employees
Yeah,
don't really have to do it.
Well, and
yeah.
And
also
they were
to
sold out online. Every time like the white sweatshirts or something came back, they're gone within like hours because everyone was posting online and buying them that fast.
was going
Mhm.
to say to your point, Kevin, to further the question and speculation, typically people that move merch have really strong communities that want the merch. And I can't
Mhm.
think of, companies with a much
Free
stronger community.
advertising.
Right. So, yeah, that's a great question, Kevin. PB.
I
What's the answer? Like,
I don't know. I don't
I
know.
don't know.
Again,
Well, no, no,
I
no.
would
Both of
love.
us can't. We can't both know. We just
Yeah.
make something up at this point.
That's why I said rebranding is my theory on it. Why would else get rid of it when everyone's buying it instantly as soon as you get new in stock online? I don't know about stores
Mm.
because I
I
kept
can
finding
see
them.
that, but I don't know, the question I would offer with that is like, if so, why not because how long has it been out off the shelves? You said for some time now.
March.
It's a lot of missed revenue for a rebrand. Like typically,
And
if somebody's going to do a rebrand, you produce up until you go through the rebrand. You say this is the last that you're going to get these.
unless
Like you
it
don't have
wasn't
to have the
ready,
close. You don't. What's that?
unless the rebrand wasn't ready yet.
Right, but
And I'm
I
not a
guess
tinfoil person, but
yeah, the point I'm thinking of is that you don't have to stop selling old brand before rebrand. I think you can
correct.
rebrand, still sell old brand, and then so your thought is they were preparing for a rebrand, stopped selling, rebrand wasn't ready, and then just didn't start selling again, just kind of let it go dormant.
Yeah, there could have been this massive announcement coming for what it's going to be. And personally, if I was Ryan Cohen or I own GameStop, I wouldn't rebrand because in 2021, more people on Earth knew what GameStop was than Apple probably because of the news articles. But if they were going in that direction, then there could have been deals that fell through. Timing. I know I've seen a lot of data and write-ups on Ryan Cohen's insider trading lawsuit that was going through Bed Bath and Beyond and the Wells Fargo fine of not reporting correctly because there's 8,000 loopholes you have to go through to report something perfectly for an SEC report, and he didn't know how to do it when he sold Chewy and bought Apple and Wells Fargo, and they found out 5 years later he typed something up wrong for that $1 million fine. So there could have been things that delayed it. And then we just saw the partnership a month ago with PSA and Nat Turner coming on. There could have been, there's obviously a merger and acquisition is usually extremely secret and takes a lot of time before that article comes out or the filing. And so there easily could have been things where they could have pulled out. Maybe something they wanted to buy was found out to be fraudulent, or there's a million things that could happen. But I cannot. I stay up at night trying to figure out why to stop selling it. Besides, they were planning on it very soon because it stopped in like March, and so maybe May it was going to come out. And when the stock went up 800%, they're like, this is going to be a ton of lawsuits and crap coming out because the stock just went up 800% and Roaring Kitty's back and everything. So they're like, okay, let's delay this another 30 days. Run up happens in June as well. Let's delay it. And then into July and August was the Wells Fargo stuff on Ryan Cohen. My prediction was that they were going to announce in May something, but they're not going to do that for the stock manipulation. They would have gotten wrecked. SEC, FINRA, everyone that works there is also, sorry, a lot of people that work and run both of those entities have worked in the very highest up of finance. So if you could find GameStop as much as possible, they're probably getting the calls to do so. And Ryan probably sees that. So that's my theory on why to stop selling all GameStop branded clothing.
It's a good thing. I mean, it's definitely better than mine. If I was a business and they were selling well, I would still run it all the way up until whatever the news does and just stop production. But I'm not
Same.
the guy that's gonna.
Collectible
Yeah,
item
yeah.
afterwards,
I have
right?
no idea. I gotta run. I have dinner with my mom, and if I'm late, I'll probably get a wooden spoon chucked my way. But um,
Sandal.
absolutely awesome hanging out with you guys. For those that are in the chat, thank you guys for hanging out. And then for PB, you have your YouTube channel, and then you're also on X. Do you want to let people know where they can find you?
Sure. I'm on YouTube at Peruvian_bull, and same thing on Twitter. There's only one Twitter account, so if you see like Peruvian BOLL or whatever, that's not me. I'm the only one with the verified check mark. Also on Nostr, you can find the Nostr and pub in my bio. So if you want to do a decentralized Bitcoin-based social media, I'm on there as well.
Thanks. And then Kevin, for you.
On X, Malone_wealth, same as Peruvian. We get probably 10 fake accounts a month coming up that try and impersonate, and I appreciate everyone letting him and I know when someone's impersonating us, but that's my main source. Then malonewealth.com.
Awesome. Well, thank you both so much for the time. Shout out to your imposters. Honestly, though, they could step it up, not be so cheap, buy the check market at least, like do something,
Yeah.
but whatever. The lazy grifters are going to be lazy grifters. Thank you guys for hanging out, and we'll definitely get together again and do it another time.
Sweet, man. Sounds good.
Yeah, thanks for having me, man.
See you, buddy.
Bye-bye.